Silver has jumped nearly 5,000 rupees. Crude has swung 4 times in just past 2 weeks. And gold is hovering around that 1.5-1.6 lakh levels. What looks like a calm in the commodity market right now is actually no calm. Beneath the surface, there's a massive tug of war playing out between Iran peace talks, risk around the Strait of Hormuz, Fed rate hike expectations, and slowing signals from China. And honestly, the next big move may not come from headlines, but from a supply shock. Now moving into this week's outlook, let's start with gold and silver, where volatility continues to stay elevated. The key driver remains the ongoing U.S Iran negotiations. On one hand, ceasefire optimism is easing geopolitical fears. On the other hand, the risk of disruptions in the Strait of Hormuz is still keeping markets on the edge. This is exactly why gold is struggling to find a clear direction. Adding to this, the US Fed has made it clear that rate hikes are still on the table, and markets are now pricing in at least one rate hike by the end of this year. Higher interest rates and elevated bond yields are limiting the upside for gold. So effectively, gold is stuck in a tug of war between geopolitical uncertainty and tighter monetary policy. On the domestic front, India has increased the import duties on gold and silver to 15% from 6%. And also, silver imports and gold imports have been shifted to the restricted category. This is likely to impact both demand and supply dynamics locally. However, one strong pillar of support remains central bank buying. In Q1 2026 alone, central banks added 244 tons of gold, which continues to provide a strong long-term floor. Moving to the base metals, copper started the week under pressure due to profit booking, a stronger US dollar, and a weak demand signals from China. Data on retail sales and industrial production came in below expectations, raising concerns and around global manufacturing demand. However, the trend reversed later in the week. LME inventories dropped to the 10-week low, and Chile cut its production outlook, which brought supply concerns back into focus, helping copper recover. In the short term, volatility remains, but structurally, the long-term outlook stays positive, driven by themes like AI, electrification, and data center expansion. Aluminium emerged as one of the strongest performers this week, largely due to supply disruptions, fears linked to Middle East tensions. The market has moved deeper into backwardation. Cash premiums have surged to a 19-year high, and inventories are now at their lowest level since October 2022, clearly indicating tight supply conditions. Zinc and nickel also saw strength. Zinc gained as the global surplus narrowed, improving sentiment, while nickel prices were supported by concerns around potential supply disruptions in Indonesia. The broader takeaway here is that the base metals are no longer just a demand story. They are increasingly being driven by supply risk, geopolitical developments, and China's economic trajectory. Now coming to energy, the most dramatic space this week. Crude oil prices fell sharply as markets unwound the geopolitical risk premium, largely due to the progress in US Iran negotiations. But here's the critical point. The underlying reality hasn't changed as much as prices suggest. The Strait of Hormuz remains effectively closed. The US naval blockade is still in place, restricting nearly 14 million barrels per day of the oil flows. According to IEA, global inventories are being drawn down at a pace of around 8.5 million barrels per day in Q2 26. While Saudi Arabia and UAE have increased exports via alternative routes, there are still no sufficient to fully offset the disruptions. Over the weekend, a few tankers were able to pass through Iran-approved routes, which has raised hopes of gradual normalization, but the ground reality remains constrained. Even recent statements from President Trump suggest that while a peace framework is largely negotiated, there is no urgency to finalize it. This keeps market in a state where expectations are improving, but actual supply conditions remain tight. So the real takeaway this week is simple. Markets may appear calm on the surface, but underlying tensions are still very high. Gold remains indecisive, oil is turning slightly complacent, and base metals are quietly building their next move. And the next big trigger may not come from the news flow, but maybe from supply disruptions further. If you want sharp, no noise commodity insights like this every week, make sure to like and share this video. And don't forget to subscribe to Commodities with Motilal Oswal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.